Hey, what's up everybody? Welcome back to Royal Blu FX. In today's video, we're going to talk about the trade that we took as of yesterday, which was on a Thursday, the 28th. And this is also going to be a video about how we draw our setups every single day or every other day or every week. Okay, but it's primarily going to be about the setups that we are creating, so you can see how we're ready to take our entries and our trades for that specific day. Okay, so also I want to remind you guys that we are releasing a signals program on our channel, on our Discord channel. That will be in the link in the description below on our YouTube channel. So definitely go and check that out, because we are going to be launching the signals starting as of Monday of next week. Okay, so definitely go and refer to that link so you guys can take advantage of our signals program. Okay, so without further ado, let's begin. So right here, we're on the 4-hour time frame. I always like to start on a 30-minute, but I definitely use the 4-hour just as something like a bird's eye view, just to see everything on a bird's eye view perspective, just so I know that the 30-minute isn't giving me a false sort of direction for that day, right? But as you can see, when you're just looking at this market going bullish like this, right? Actually, let me even just delete this here. That's at 10. Okay, so we were at 9:30 is when the market started, so we will delete the 9:30 as well. So this is a 9:30. Excuse me, that's not 9:30 right there. Let me go down to 15 right there. Okay, 9:30. Okay, there's it. That's 9:30. So once 9:30 happened, right? I didn't trade the open. I just wait for price to, open up first before price starts to run. And what I typically do is I start on a 30-minute, as you can see, like this, right? So now you can see this prices are bullish. They're really, it looks like it's bullish, but it looks like it's also, when you zoom out, look what we're facing right here. There's a lot of supply zones, right? So one of the few things I always have to ask myself is when I'm on the higher time frame is, if I'm on 30-minute, what am I actually seeing based on direction? Where's the direction headed, right? Well, a lot of you can say price is bullish, but some of you can also say the price is also bearish, because we have multiple supply zones here, right? And the last one that was mitigated was this one right here, right? And so you can ask yourself and say, okay, well, that's a supply zone, right? And then there are a lot of traders that are trying to sell it, but there's a lot of other traders that are trying to buy it as well, from even all the way up here. So what you need to understand is that's the first part, okay, is understanding where I am in the market based on supply and demand. Yeah, I can't just look at this impulse move and tell myself, okay, this is just bullish, because that's not entirely true, right? But if you look at it this way, now I can see that there's also supply coming in. So in order for me to read where we are in the market, we need to read where both supply, okay, and demand is at all times. So I'm seeing now that we're bullish, but there's a lot of bearish has come into the market, right? Bearish move, and then that we just had a supply zone right over here, right? Price reacted to it. So this is our reaction point in the market, right? So once price reacted, just like this, price went bearish and then started running bullish, right? Then another thought in my head came in. I was like, okay, well, this is supply zone. There's another reaction point right there, as you can see. Price reacted there as well, right? So I'm thinking in my head and saying, okay, well, we haven't actually mitigated this demand zone here, because when price reacts from a supply or demand perspective, we want price to come back to mitigate the position, right? As far as this goes, there's your supply to demand, right? Price hasn't come back to fully mitigate this, right? And you can see that because it hasn't really touched the order block, right? This here can be included as a inducement, because price didn't fully tap the zone to continue. It just it went on the surface of the zone and then continued up, right? So that entices other traders to continue buying. And in some points, I do use the inducement as a sense of bullish momentum, because it does ride up, right? And its intention is to go and fill in another position, right? To fill in another or mitigate another position. So in this case, I dropped down. Once I found out what I'm looking for here, right, on the 4-hour, you can easily see that prices are bullish, but they're also bearish, right? Let's go down to the 30-minute. Excuse me. All right, so once this has happened, there's 9 o'clock, right? we're going to go all the way down to the 3 minute. I always go down to 3 minute just so I can get price moving, you know, sort of candle per candle basis, right? If I go on the 1 minute, it's no different really. Although I do enter on the 1 minute because I want to make sure I have the tightest stop loss ever, right? So there's your 930 right there. Price moved up, cleared out more liquidity. It respected this sell to buy here as well. So if I was on the 1 minute right here, you can see right here is your 929, here's your 930. 930 drops, right? So immediately we can see that we had an interaction with price. Let me just zoom out here actually. Okay, yeah, interaction right here. Here's your sell to buy, the last sell to buy. You can see this is your order block right there. And then we can also see that price at 930 price dropped here. So that's 929, the 930 dropped here to fully mitigate this right there. So that would have been an entry, right? And then TPing somewhere above the zone or at the zone. So that would have been an entry. Anyway, but that's not what we did here, right? So I was just watching what price was doing. Price rejected this supply zone. It obviously took out liquidity. This is not any means of a break of structure. You can see price going down bearish so quick, so fast. What I'm looking for here now is I'm expecting these demand zones now to be a reaction points. Demand, 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 right? Demand, demand. All these demand zones have to fail. So all these demand zones are a reaction point. And that typically means to us is that from the very beginning, when price reverses here, that it's going to show you a flip zone. Here's your flip. There's your buy to sell there. That's the first indication that price tells us that demand is weak here, supply is taken over. And this is an indication where we're looking to sell off from, you know, when price eventually gets there, right? I wasn't there at this point in time. You can see how price did reject, right? There. So I will just put this as my supply zone right there, right there. Oops. And I don't use those. It just pops up all the time. And then here we go, right? Now you can see what's happening here. So here, immediately you can see buy to sell. Price came in here. This is a breaker, in fact. Okay, tapped, mitigated, continue bearish. Now this is a reaction point, right? So price reacted here, bought, and it sold. So immediately off the bat, this is my supply zone. This is my next supply zone here, because this is the last bullish move that failed to take a new high, you know, to continue high like this, right? And it just failed. So this tells me that supply is strong here. And so that's why I will put my supply zone here now and wait for price to get there, right? That's what I want. If price should ever react from, say, this demand zone here, and it hasn't come up there yet, if it comes here and taps and then reacts and continues, and it doesn't mitigate, then this will be my new supply zone. I would wait for price to get there now to do that, right? So a lot of times that price does come to mitigate your supply or demand zones, but there are times that it doesn't. And well, the times that it doesn't is when we want to sort of be precautious. We don't want to just freeze and stop and say, hey, you know, price never reached our supply zone now. What do? I'm still going to have to wait while price is continuing like this, right? And it never comes up there, right? We want to continue the order flow. That's important, is to continue the order flow, so you don't just have to stop and wait. You're simply reading what price is telling you based on the failure. Okay, so there's a failure demand. Here's another failure demand, right? So I selected this supply zone here specifically because this is a breaker. A breaker block is essentially a candle like this, a full body candle closed below the break, right here. So typically price will come back to the breaker like this and continue, right? Now it's not wrong to say that this is your order block either. It really just depends on what you're looking for and how you translate each supply or demand zone, right? Different supply and demand zones create differently from each other, right? So this is a very typical one, which is a breaker. So let's continue here. There we go. You can see price comes into the breaker like this, right? So a lot of you can say, yeah, well, didn't it mitigate from here, right here to here? Yes, it did, right? Normally, I have it where price comes into the 50, So this would be my 50 EQ, right, from here to here. Right, you can see how the 50 EQ has been tapped. Price is sold off, but since the supply zone is so small, I can then just utilize this whole supply zone, literally this whole entire area, even up here. You might be asking me, well, why do you have your supply zone, your risk all the way up here? Well, it's because I have a small enough zone, supply zone, that I can risk a little bit more just in case price goes above, and this is so that price doesn't go above to take liquidity and continue, right, to go above the high like this and sweep the high or whatever, which it could very much do, right? But here we go. So we just entered there, right, just like that, right? And now what we're doing is just following price. We're tracking price. Part of tracking price and managing price is understanding what supply and demand is doing internally in here now, right? Because we had price respect the supply zone, you can see the behavior here. You can see there's your buy to sell. This one has not been mitigated at all, right? Right there from this low to this here, right? It hasn't really touched at all right there. So then we have this sell to buy here, right? So now we have this area here, and this is really important and crucial because now you see that there's a buy to sell, right? So price wants to come up here to mitigate, to continue. There we go. From this perspective, let's go from here to here, right? You can see where that last buy to sell is. There you go, buy to sell. Why did price come up here to this supply zone? It's because we had a failure. We had a failed supply to demand, and then here we had a failed buy to supply, which means this would be our supply zone, right? So there we go. Price is coming up a little more just because you see, this is what I'm talking about. You can either enter at the open of the zone here. I like to essentially enter at the 50 EQ right there because there's no knowing sometimes when price will come out and sweep you. It can always create liquidity and come whenever, above or below, right? So there's your 50, right? I always put my risk right above, right? Or if it's a small enough zone, you could also just do that. Hold on, let me delete this. Let me redo this back again. You can just do this, right? If it's a small enough zone, right? And depending on the pips that you're wanting to risk, right? This is still safe, right? So either way, it's a win, just depends on risk and knowing where your failed supply and where your failed demand is, right? So there's your other entry, but I didn't enter there, excuse me. I'm just showing you guys that as an example. All right, let's continue here. Right now we have this failed demand to supply, right? We always need to make sure that did this demand react to anything, right? It didn't really react to anything. There's nothing that price reacted to. Actually, no, I see it right there. Sorry. There it is. This is another one right there. So this is a very legitimate supply zone, right? So there we go. Price continues. It hasn't reached the full capacity of this right here, right? But it's internally it's mitigating internal supply from here to here, right? You can see there's your buy to sell. Price comes in here and sells off, right? There we go. So that was the TP that we had, just like that actually. This was the TP we had for this trade, and that was it for that day, right? All you need is one good trade, right? Be very specific in how you're analyzing, okay? When you're analyzing the markets, make sure that you clearly understand what is the failed demand and what is the failed supply, okay? That will help you tremendously, knowing what a failed demand and what a failed supply is, because a lot of times, a lot of traders always look for a break of structure, right? A break of structure isn't a bad thing to look for, but you have to translate that failed break of structure as to something, meaning that just because I look at failed supplies, I look at failed supplies more than I do look at break of structures, because failed supplies and demands happen way more than break of structures, okay? So if you look at this, for instance, if we're doing this, right, and price is doing this, and notice that this is a high here, right, and that this is a low right here, right? What has happened between this low and this high? A lot of failed supply, right? Failed supply, failed supply, failed supply, before that break of structure has ever happened, right? Failed supply, yet you have bullish momentum, right? The bullish order flow, right? So this is why I say that a lot of the times I play failed supply, failed demand rather than just a generic break of structure, right? And if that was the case, if break of structures were really the case, right, then the market would be way too easy just doing this, right, it would be way too easy for anybody and everybody to catch the trades, right? Just like that, right? So, you know, in my instance, whenever I trade again, I say just looking for failed supply, failed demand, and that can always look anything like this, right? I mean, anything. You need to translate every specific move in the market to see, is price giving me, am I reading price correctly, right? And the only reason why we do failed supply and failed demand is because that's what translates to me as what may potentially happen in the market as far as the move goes, okay, as far as the impulse happens in the market. So in an instance like something like this, right, we have a supply here, right? Now from this low here, now the price came here, this low here failed to break that high. This is considered to be a failed supply to us, right? So failed supply came in, right? There must be something, and maybe an order block in here, right? So now we know that we have a failed supply coming in point intact, that now we need to be looking for sells here, right? Because this is a failed, not failed supply, it's a failed demand. This is a failed demand here. It never broke this high, right? So it flipped right away, and price comes back to mitigate the last order block, or say the last buy to sell. Another internal failed demand to supply will be in here, right? And then continue bearish, just like that, right? You can also see that there is liquidity being built here. So then we also have more for the market to come up here again, just to mitigate fully to mitigate this position, right? Now we have to understand, okay, from this high to this low, what is price trying to actually tell us? Well, we don't actually know, other than price coming here to mitigate. There's what we call in the markets the first-time buyers or first-time sellers. Okay, when price gets to a supply or demand zone, there are first-time buyers and first-time sellers, like this case. So in this case, it would be most likely when there's a balance like this coming bullish to mitigate, right? There are sellers that come in first, right? And these guys are the so-called know-it-all of what price is trying to do, right? So they're starting to sell. And then when price goes up, now we understand that there were sellers and buyers, right? I'm not buying, I'm not selling, because I don't see any evidence for me to sell or buy yet. But once price reverses like this, right, now from this low to this high, this low and this high, you can tell that this is bearish. There's a bearish order flow. And now we can also indicate that there's a failed demand, right, which means demand is weak here, hasn't broken this high. We can wait for price to get up here, right, and sell it off here again, right, whatever. And this most likely may be a demand coming off from a major demand zone from here, right? It really all depends, even from this perspective, just like this. There's your failed supply, more failed supply. So we see that this high here tried to go all the way down to put in a new low. It flipped, came back to demand here. This is where the next entry will be for the buy, just like that, right? So that's how I see everything. And failed supplies and failed demands, guys. You know, it takes a little bit to find out, to see and translate all this data correctly to, you know, what type of sense it can make to you, right? But at the end of the day, guys, if you don't understand what failed supplies and failed demands are, you know, it may, you know, shoot you in the wrong way. Obviously, it may cause a little, you know, disturbance on your own way, meaning like it won't work out for you, obviously, because everybody has a different type of style or whatever the way they see the markets. But in this case, this is how I see it. I don't look at break of structures. Well, one of the things I told one of my students was he was having difficulties entering a lot of the times, and you know, I just told him to say, hey, look, you don't necessarily need a chalk to enter the markets. He was looking for a perfect chalk, just like this, right? This is a chalk, right? And here's your entry. That's fine, because there's a flip in there, right? But look at all the way in here. If I go all the way here, there's your high, there's your low, right? In this high and this low, there is failed demand happening, right? And you could enter, you can very well enter, right? So here's an example: buy, failed buy to supply, right? So this, from this high here to this low, this is our failed demand to supply, right? That's how you read it. Not just because it's like a bearish and it's a bullish candle, it's like a doji or whatever, and then you don't, you know, whatever. It's because this supply failed to continue bullish and it went bearish. So this to me is a bearish candle. It's not a bullish candle because this high never reached above this high. So now we put this as our main supply zone, right? So I would split this in 50 at a 50 EQ like that, right? Either enter here or above. Might even be even here actually from the body too. And that's how I would translate it, right? And then once price gets in there somewhere, wherever that is, I would sell it, right? And then now price came down. Actually, this was the first one, right? And then here's the second one right here. This would be a breaker. Why? Because a solid body candle closes below a low right there. So this is a breaker. That's another entry from the 50. Boom, right? So we have failed demand. Let me just draw it out for you guys. We have a failed demand, another failed demand. Do you see how it paints? Do you see how the picture is painted here? Right? You see a high there, right? You can see there's a high, a lower high, a lower high, right? Just like that. That's how you read supply and demand, okay? And here's your next entry, right? So now here's your next failed demand to supply, because this demand failed to go bullish and break above this high. And it came in mitigated, which means price coming back here for the entry, right? Just like that, right? This is how you see everything, just like that. So I hope that makes sense to you guys, right? Price came back in here. Now you know that this is the low that never broke that high. It mitigated, but it flipped again. So this is where the next entry would be. And this is part of how, just some of the ways we do our setups. We set it up this way to get a full picture, a full rounded picture of what price is trying to do and what it's trying to tell us, okay, based on supply and demand. A lot of times, a lot of traders would just, get on the charts and start looking for an excuse just to enter, right? But what you really need to do is when you get on the markets, guys, is just to take it slow, extremely slow, and just watch the market. Just watch the market, that's it, right? So I hope you guys learned a thing or two about what I was trying to say today on this video. If you guys haven't already, go ahead and subscribe to this channel, and definitely please leave a like on this video as well, just to share it for other people out there who may want to obviously gain more knowledge on topics like this and videos like this. And also definitely refer to our signals group channel that's on the Discord channel, right? The link will be in the description below, guys. Until then, I will see you in the next video.